Hello and welcome back to Cryptocurrency Trading Masterclass. In this video, we'll take a look at some examples on how to use Bollinger Bands in real life, as it were. So let's go ahead on this Bitcoin chart, add the Bollinger Band indicator. And you can see that if you remember, there was a time after the big retail collapse that basically the markets did nothing, and for a while, right around, like right here, just above 6,000, you can see the Bollinger Bands get skinny, and then they get wider, and then they get skinny, they get wider, and etc. So remember, that does mean something. And this was a classic signal to go long. And that's because the Bollinger Band started to widen. The moving average, the median in the middle, started to turn higher, and you can see that the price broke out. So this tells you that something's changing. So as you look at this, you have a market that's very quiet, right? Let's go ahead and draw a line at basically 12,500 or so. And you can see that we stumbled here a little bit, and then we kind of fell back, and then we broke higher. Well, there's two different reasons to think that this is a good trade, or at least a good signal to get long. Because we've broken resistance, we've broken the top of the Bollinger Band, and keep in mind, it's based on the last 20 candlesticks, or 20 bars in this case. So the average will take wider, or take longer to widen out like it is. So the fact that it's above this after this type of action, not necessarily something that you need to be concerned about, in the sense that it's not, oh my God, it's overbought, I need to start selling it, because it's opening up. Now it takes, when the deviations are this far apart, and if you get like a move all the way to up here, for example, then yes, you have an argument to be made for that. This just shows you that business is picking up. So you could have bought anywhere along this support level. And the nice thing about the Bollinger Band is you can see that it really held up nicely, and it really comes down to you. Do you want to take profit when it breaks down through the average? Or do you want to wait until it breaks down through the bottom part of the Bollinger Band indicator? That could have been done either way, which would have you all the way up to 30,000 after an entry at about 12.5. So clearly, that could have been an extraordinarily big deal. Now, if you want to look at tighter time frames, like the hourly chart, you're in an uptrend. So, based upon the daily that we had just showed. So that eliminates all selling. I mean, you can trade a counter trend, but it's a great way to lose money. At least until something major breaks in the market. Well, right now, nothing major is broken. And you'll notice that the band continues to tilt higher. The last day or so, as I record this, has drifted a bit lower. But notice something. Resistance, resistance, resistance broken above it. We're kind of dipping a little bit below it here. I'd call that 38,000. So pay close attention. One way you could play this is if we break back above the 20 SMA, the 20 simple moving average, then we're probably going to see another move like this or like this. It'll be a continuation of what's going on. Regardless, you don't have a sell signal right now. Even though it drifted lower. Yes, you could say, all right, well, we broke down here, it failed here, maybe I should be selling. Problem is, it's an hourly chart. It's probably a small move at best. You're in an extraordinarily bullish uptrend, as shown on the daily chart. You don't want to try to short this. I mean, really, it could go all the way down to 30,000 and still be well supported. So the odds are just not in your favor. And that's really what trading is. It's, are the odds in your favor? You take the odds in your favor trades, and over the longer term, you make more money. So this, to me, isn't necessarily a sell signal, but the fact that we're right here at potential support, and if we can cross that, then I think that's a good sign. You have seen on the daily chart, I'll go back to the daily here, you have seen where you profited from what is known as the squeeze. We're squeezing and then we're breaking back out. The market trading inside the bands. Now, it's easier to do on the daily chart, but you need some type of lack of trend, and that's just not the case right now. But on the 30-minute chart, you can go back and forth. You can see sell, buy, sell, buy. If you sell it there, you're starting to see it break out of the bands. That tells you that's not the kind of trading you want to be doing anymore. Now you're buying it on the dips. So Ethereum, we'll add the Bollinger Bands to this as well. Notice how wide it has gotten after squeezing. That tells you that volatility is picking up. Now, let's try to find some type of order in all of this. And I would say somewhere right around here, there is going to be support or resistance. So I'm going to mark this as 1500 with the understanding that it probably, based on what we've seen in the past, it's probably more something like this. And this happens. It's probably like a $50 thick support line is the best way to put it. So what I would be waiting for is either a cross above the moving average. Now that we have bounced significantly, this bar is kind of a significant bar. And we'll talk about that. It's something known, when you do a candlestick, it's something known as a hammer. So I'm looking for this 1500 level to offer a bit of support. Once you cross the moving average, the median, then you're looking to probably aim towards the other side. And then at that point, you can make a decision to take profit, or you can make a decision to ride it out until we break through the bottom of the Bollinger Band again. So if you really want to day trade back and forth, you can. But again, I would highly recommend that you just stick with the longer term trend if you are going to do that. Depending on where you're trading, crypto can be difficult to day trade because the spreads can be wide. And when I say day trade, I mean in and out in a matter of minutes. It's one thing to hold on to it for 8 hours. It's another thing to hold on to it for 8 minutes. This is just a strong uptrend. I mean, every time it came back to the moving average, the middle part, you could have been a buyer. Pretty straightforward, pretty tight. Here's that squeeze again. And you can see once you start breaking out of the Bollinger Bands, yes, it is a little overdone, but we find support again right at the median, walk it right back up. So again, that's pretty strong. And like I said, most of the time your stop loss is going to be on the other side of the band. So if you break out, your stop loss goes on the other side. And that's okay, because when you get a move like this, although the stop loss might be a little bigger, a little farther distance than you're comfortable with, the reality is when you get a move like this, it typically signifies something bigger. So you're aiming for more. If you put your stop loss on the other side of the indicator, you didn't get stopped out. You got in somewhere around here. Your original stop loss was right in this area. You got stopped out up here. Poked down there, probably took you out. Pretty straightforward. Some people will just go back and forth in the bands nonstop, but over time, you'll learn that following the higher time frame trend is going to be by far your best friend. I mean, yes, you could have made money selling Ethereum at that point, but the reality is that every time it pulls back like that, the move higher is much bigger. So really, you don't need to capture every move. You just need one or two good moves to make a nice return. So I would definitely pound that into your head. In the next video, we'll talk about how to trade with trend-based indicators and how to trade based upon trend-following indicators.